I'm discussing what happened to the technology sector in the last 3 weeks, why did it happen, and is there still value in it? You're watching the Should I Buy It show. Stay tuned.
3 separate devices. This is one device.
You associate with people that are better than yourself, and
I'm going to make him an offer again.
Hi everybody, I'm Sam and this is Entiversal. You're watching episode 3 of the Should I Buy It show. In it we're talking about exciting innovations, promising investments, and basically trying to see where the value is and should we buy them. And today we're talking about the technology sector, trying to outline what happened to it in the last month, why did it happen, and probably trying to figure out what will happen in the future. Is there still value in technology? And why am I talking about that? If you have watched my previous videos, you know that I mostly invested in technology. So what happened? Well, about 2 weeks ago there was a really sharp sell-off in a single day. As you can see, the Nasdaq was about 80 points down. All the biggest tech companies and names that were super high growth were down between 4 to 9%. And I'm not talking about small technology companies. Here I'm talking about the biggest public companies at the moment were around 5 to 9% down. Those are just tens of billions, if not hundreds of billions, erased in a couple of hours. And as you can see, in the next week the downtrend continued. And let me just skim over a few of the biggest companies and what happened. As you can see here, just so sharp sell-off, and this is Apple. This is the biggest public company. It was around, I believe, 4% or 4.5% down. Amazon, again, the same thing, and then continuing downtrend. Nvidia still not even starting to recovering. That's Alphabet, Google, again, very sharp sell-off, and now it's recovering. Facebook, sharp sell-off. Micron, my beloved stock, it just hurts when I see it, but I'm kidding, and I'll get into it in a second. So as you can see, all of the big companies that have returned between 50 to 100% in the last year were just smashed, and a lot of people panicked. But let me just make the chart to 3 months and then to a year. As you can see, the Nasdaq is just killing it. And this little bump is the sharp sell-off that we saw. And as you can see, it is just a very normal and healthy correction. Should you be panicking? Absolutely not. Absolutely not. What happened? Why did that sharp sell-off happen? Well, as you can see, it was on 28th of November, so just coming into December. And in the month of December, most of big hedge funds and mutual funds and so on, CEOs, just get into break. The month of December, you can follow that as a volumes is around 60 to 50% of the average volume through the rest of the year. So the truth is, just most of these millionaires and billionaires just go and have time with their family and on holidays and so on, right? So that is why I believe beginning of December there is it's called sector rotation, because all of these people that basically they control billions, tens, hundreds of billions, even trillions of dollars, they want to take their profits because they don't want to worry about them and so on, right? They're on a vacation. So obviously their profits will be in the biggest and most successful companies, right? Which was the tech sector in 2017. So of course the biggest sell-off will be in the tech sector, right? That's one thing. The next thing is all those hedge funds and mutual funds, they need to make their reports for the 2017 year, meaning that they need to show what kind of earnings and gains they have at the end of the year, which means that again they need to take some profits. So that's another driver that makes this sell-off logical. And as you can see, it is very actually healthy, and Nasdaq is already about to recover from it just 2 weeks after that. The next thing though, will the money return? What happened? Because if you look at the S&P and Dow Jones, it actually was up on that day, or most of the dividend, very value oriented stocks were actually up. I believe that happened because, again, a lot of people don't trade as much in December and probably beginning of January, which means that they want to put their money in very stable dividend returning valuable companies. Okay, so that's why there is a surge there all of a sudden while the growth companies were down, and that is just logical. As I told you, that's called sector rotation. But my belief, and obviously I'm not a prophet, I'm not saying if that will it happen, but probably all those money and probably more will return to the tech sector in the beginning of 2018, because it only makes sense. Profits were taken, now companies are actually cheaper, but they're still the best companies. I mean, nothing has changed. Absolutely nothing has changed in the companies. Only the price has changed. And if the companies were with amazing outlooks and very, very successful, well, guess what? Now they're just cheaper. If you look at companies like Facebook, like, Micron, which I believe so much in, nothing has changed about the companies. They're still growing. Their businesses are more powerful than ever, and their price is cheaper. But what that does mean, that if you thought that they're good investments a month or 2 months ago, I bet you now they are even better investments, because their price is lower and they're high growth companies, meaning that in the last month or in the last 2 months, they probably have more earnings, per day at the moment, or more revenue or something like that, whatever you're looking at. My 2 cents are that the technology sector will be bouncing back, and now it's actually on a discount. So, if you haven't gotten into it, if you haven't bought into some of those stocks, don't try to time or wait where the big movements will be, and because you lose. You cannot time the market. Just invest in whatever you see value. And I want to show you something else that just, I believe, confirms my thesis and my belief. This is Facebook's chart in the last 2 years. So this is 2016. And as you can see, it's been growing again very, very well. And here, at the end of October, all of a sudden, a big sell-off happens, okay? That continues through November, as you can see, through December, and then at the end of December, start of January, all of a sudden a big bounce back is coming, and from there, I believe this year it's around 50% up. So this just looks a lot like, the current situation in the moment. Even at the moment, it actually looks better, okay? And let me just show you a very quick talk from James Cramer. What he says is basically what I just said, that the hot tech stocks, there was a little bit of sell-off for the reason I said. He also pinpoints that because of the tax reform, and big technology companies do not depend as much on the tax as some of the dividend companies. That is why, again, the dividends kind of went high when the tech went down, but overall the big tech companies are much cheaper based on forward outlook when you compare them to the big, dividend companies like McDonald's, like Coca-Cola, like, Procter & Gamble, Johnson & Johnson, all those things. Facebook, Apple, Google, all of them are much cheaper. And as you know, Facebook is my favorite, and as of Micron, I believe even much more in it, but I'll get into that probably in the next stocks I would buy. So overall, should I buy the tech sector? Absolutely yes. I hope you enjoyed this episode of the Should I Buy It show. It's coming up every Friday evening, so stay tuned and see you next time. Stay Entiversal.